Are you marking supply and demand on the 15-minute time frame, but you're finding you're not getting enough trading opportunities? Well, in this video, I've got a solution for that. Let's take a look at a lower time frame, marking supply and demand, so you could spend more time doing the things that you want. Let's get into it right now. What's going on, everybody? I hope you're all doing great. Today we're going to be talking about supply and demand. We're looking at CAD JPY on the 15-minute chart. Now we know supply and demand zones are created when there's an imbalance between buyers and sellers. And you will often see price return back into the area before changing direction or choosing its intended direction. And what I want you to realize is this happens on all different time frames. So we're not just required to mark it up on the 15-minute chart. So I want to show you on the 5-minute chart here. This was all marked up. All the supply and demand was marked up on the 5-minute chart. And you can see how price came into the area. Now you can see price consolidated here, broke below, almost coming up to the area. This may have been an entry, but it ended up coming into the area finally. And you would have been looking for an entry pattern on the 1-minute time frame, and would have been choosing a target of your choice. You could be targeting the lows, the highs, or the next supply and demand zones. But this happens over and over again. So you can see, here we go. Price breaks below. We mark off the area of supply. Comes back into the area before changing direction. Again. It happens again and again. Now, with here, it broke below. We marked off our area. But price didn't respect it. It went right through it. Bounced slightly off this area of supply. Might have been able to scalp something out of that. And then continued to push up into supply before changing direction. Now, it also came back into the area that it broke through before bouncing off of it several times. So there might have been an opportunity there to make something off of it. But this happens on every time frame. And we drop down to the 1 minute. You can see that price came into the area. This would have been a good pattern to get in on right here. Signs of exhaustion followed by an engulfing pattern. And if you would have went at the low, it would have been about 7 pips. Now you could have targeted before the next candle before it shifted direction, or you could have targeted the high, and you can see how that could have worked out. It came back into the area a second time, and again, signs of exhaustion followed by an engulfing pattern, and you could have targeted the high here. And this happens over and over again. So you can see how price came into the area of supply here. Now, I'm not sure if I would have taken this trade. So it depends. You have to decide what's best for you. You could see that price pushed into it and reacted and then pushed away. Small candles, an engulfing pattern, pushed, broke below these candles. May indicate that the price was going downwards, but there's no way to know for sure. We're just trying to read it as we see it. And you could have targeted the low here, the low here, or back into the area of demand. And this happens over and over again. And what you can do is try adding some additional confluence to your trading. So start keeping track of everything. Don't just take trades and not learn from anything. Look at some higher time frames. Where are you on the chart? Analyze the supply and demand zones on the higher time frame as you're taking these trades with these setups, and see if there's anything that you can notice that may be affecting your trading. Are there certain types of reversals that happen at certain times of the day? All of these things can help. The more information that you have, the better. You're trying to refine this. We know that price reacts at supply and demand, but it doesn't always respect it. So you need to take a closer look at everything you're doing and try to identify issues that may be causing you not to win as much as you wish. Now, if we take a quick look here on Euro USD. You can see here as an example again, where price was going up, higher highs, higher lows, and then price pushed down, broke below previous structure, creating an area of supply. We marked the area off, and you may have been targeting the low here, or the low on the 1 minute, whatever you choose. Whatever your target is, that's for you to decide, but you need to stick to it and follow it to find out if it's going to work for you. And you can see how price pushed strongly above, breaking above structure. So we considered this an area of interest, marked it off as an area of demand. Price returned, and it did react to it, but it didn't respect it. Pushed through it. But the interesting thing here is a little while later, price did come back into it, and it bounced off of it. So if we would have been looking on the 1 minute time frame, there could have been a potential opportunity for a trade. And when we're looking at all of this, like I said, look at the higher time frame, get the bigger picture, see what's going on. See where you are with supply and demand on those other time frames. Maybe you'll identify why the trade didn't work out. But the more that you do this, the better you're going to get at your trading. If you have any questions about this, let me know. Leave me a comment. Until next time, bye for now.